Hello, and welcome to today's webinar, Disaster Proof Your Personal Finances. If your livelihood is being affected by the COVID-19 pandemic, you are not alone. With many public-facing businesses and organizations closing or going virtual for now, the uncertainty of it all probably has you feeling fear. But making money decisions from a place of panic rarely turns out well in the long run. So here's what we're going to cover today. We're going to talk about 4 things you should do if you're in financial crisis right now. And we're also going to talk about 3 things that I do not want you to do. We'll also talk about 5 key ways to disaster proof your finances for the future once this crisis has passed. And we'll also talk about something extremely important, and that is how to develop a rock solid mindset of emotional invincibility. My name is Christine Lucan, the financial lifeguard. If we have not personally met, it is so good to virtually meet you. I am a money and emotions expert. So I am a certified financial counselor with over 12 years experience helping people with their personal finances. And I specialize with the emotional aspects of your finances. So let's get into this. So money indeed is emotional. And, honestly, I'm a little tired of financial professionals and other money gurus telling you to just take your emotions out of financial decision making. Because the truth is that they're asking you to do something that is literally impossible. Science has recently proven that the moment of decision happens in the same part of the brain that processes emotion. So this means we cannot remove emotion entirely from the equation. But the good news is we can expand our knowledge about finances. We can learn more about how our emotions affect our money. In addition, we can also learn how to turn off and short circuit those emotions that keep us stuck in self-destructive patterns. And we can also learn how to harness the power of our positive emotions. And we will talk a little bit about that today. And a part of having emotional control around your money is having good, solid information about what to do, right? That's half of it. The uncertainty is one of our greatest enemies when it comes to handling our personal finances. So let's get into the do's and don'ts if you are currently in a financial crisis. And you know what, even if you're not feeling the effects right now, at the moment that you're watching this, you might be concerned that changes are coming that is going to cause you to be in this situation. So it is super important if we can know these things even before we need them. So here's the first one that we want to do, and that is we want to assess the situation. It's important to get a clear picture of what is actually going on with your personal finances. It's very hard for us to know what positive and proactive actions to take if we don't know what we're dealing with. So, if you are someone who is coming into this pandemic situation and you haven't been paying close attention to your finances, you haven't been tracking spending or your net worth, this is the first step. So, what is your income? What are your monthly expenses? What is the value of your assets and what is the level of your debt? Until you know exactly what you're dealing with, you can't make constructive decisions relative to your personal finances. So does a cut in income mean you're going to be short $300 of covering your monthly essentials? Or are you going to be $3,000 short of covering your essentials? Assessing the situation and seeing it in black and white will allow you to make a plan of action. So that is the absolute first step. And the easiest way to do this is, depending on how and where you're spending money, go and print out your credit card statements or bank statements. And then you can start looking at those and figuring out exactly where your money's been going. Do pay the minimums on your debts. If your income has been cut or there's a possibility of it, it's okay to just pay the minimum due on them for now. Normally, I'm a big fan of paying off your credit cards in full each and every month, but it might be wise for you to conserve some of your cash right now, because you may have expenses that you need to be paying. Um, so it is okay to pay the minimum dues for now. Now, if your income hasn't been affected, then I would consider keeping up with paying extra on any of your credit cards and debts as long as you can do that. If your income has been cut, you may want to call your bank and see if there's a program for deferral or reduced payments. So, just this past week, one of my banks announced what they called a coronavirus hardship relief program. And, that included eligible customers being able to defer payments on their auto loans, on their credit cards, on their mortgages for up to 90 days without any late fees and without any negative reporting to the credit bureaus. So basically, what they were just doing is tacking those payments onto the end of the loan. So if you've been laid off or your business income has significantly dropped because of what's going on right now, be proactive and contact your financial institution to see if they have a similar program. Do see if you qualify for assistance. Don't be ashamed to ask for help. This might be the first time that you have ever faced the possibility of having to file for unemployment. Sometimes we think that this is only things that happen to other people. Back during the recession in around 2008 time, my husband was, had a temporary layoff and he had to file for unemployment. And, that can be a little bit embarrassing if you've never had to do that before, if you've never had to, accept that help. But that's exactly what it is here for. And the good news is that unemployment has now been extended to individuals who wouldn't normally qualify for it, specifically because of what's going on with this pandemic. Um, and this includes individuals who are independent contractors and who are self employed. So, the best way for you to figure out is if you qualify is to go to your state's website. Your state government has a website. They will have a section under there for unemployment benefits. And that should give you the guidance and the direction that you need to see, first of all, do you qualify? And then how do I apply for this assistance? So the other thing is, there are now small business loans through the SBA that you can now qualify for, depending on your business and depending on what exactly is going on in your industry, that you might be eligible for that. The only thing I want you to just be aware of is that if you take this loan, this is not a handout. This is money that will have to be paid back at some point. So I would be very cautious about accepting or taking on any debt or entering into any new loans while your income is cut. So I would look first to the unemployment, especially if you're self-employed, check into that as well. The other thing is if you or somebody else you know is in a situation where they are what we call food insecure, like they're not sure if they have enough food to get through this. Um, there are a lot of nonprofits and churches that are rolling out programs to make sure that breakfast and lunches are delivered to kids who aren't in school right now, because normally they would have been taking advantage of the school lunch program in getting food that way. So there is a lot of assistance available out there. Um, I know that most states have suspended things like foreclosures, um, and things of that nature. So that's going to give people some protection there. And if you are finding that you are having trouble even just making your regular bills like utilities, and that sort of thing, be proactive and reach out to those companies and see what sort of programs or relief they might have for you, because obviously this is unprecedented times, you guys. So we need to not be afraid and to not be ashamed to accept help if you really need it. All right, we do want to cut unnecessary spending. So we need to go back and revisit um, the first point about assessing what's going on in your finances. This is really super important because we need to know exactly what we're dealing with, right? So it's very hard for you to figure out where you're overspending and what can be cut back on if you have no clue where all the money's going. So, are there large purchases that you might be able to postpone right now? Um, maybe you need new tires for your car, but if you're working from home right now, maybe that's something that can be postponed for a little bit. Now, I know some of us, certain expenditures are just naturally being cut because we can't access those particular services anymore, right? I'm not going to be spending any money on massages or getting my nails done or getting my hair done because I can't go and get those things done. So, obviously those are natural cuts that can be made, but there may be other things as well. Can you cancel subscriptions or services temporarily that you're not using? I just talked to a client of mine and they had a membership to Massage Envy. And it's like, well, they can't even use that right now. So maybe we can cut that. I also have a lot of clients who have kids in sports. And I said, look, you need to call and have those payments temporarily suspended. Your kid is not using, they're not doing competitive dance right now. You shouldn't be paying for that. So those are some things that we can naturally cut until life gets back to whatever our new normal looks like. All right, let's talk about our don'ts. Don't raid your retirement. I know this might be tempting because Congress has actually waived early withdrawal penalties from retirement accounts. However, you will still be punished with taxes, and you're selling at the worst possible time, right? If you're selling in a down market, you will be realizing your losses right now. The stock market is going to come back. And if you hang on to the investments that you have in the stock market, the value is going to go back up. So I was talking to a certified financial planner, a friend of mine, Anthony Ruffalo, and we were chatting back and forth on LinkedIn, and he said something that was so profound that I am going to tell you exactly what he said word for word because it's so important. He said one of the worst financial mistakes someone can make at this very moment is an early withdrawal from a qualified retirement plan. He said, I would beg, borrow, and steal before liquidating any retirement account under the current conditions. The biggest penalty of all will be the loss of potential growth of compounded interest over the next 20 to 30 years. And the consequences are devastating and often underestimated. So please, please, please do not touch it. Don't touch it. Do not raid your retirement. The other thing you need to keep in mind is you're essentially stealing from your older self. Now, one of the things that I will have my clients do if they're having a hard time motivating themselves to save for retirement is I will have them download an app or go to a website where you can age a current picture of yourself to being 70 or 80 or 90 years old. It's a little creepy, it's a little unnerving to do that, but it's a reminder that the choices that you're making right now are going to affect you in your elderly years. And we want to make sure that we are doing the right thing and we are doing the smart thing right now while we are in our prime income earning years. Because, if you're 70 or 80 or 90 years old, you may not have the energy or the good health to be generating the kind of income that you're making right now. The other thing to keep in mind is that money that is in qualified retirement accounts is protected from bankruptcy and lawsuits. So if completely go to zero with your income, and because of this whole thing, you have to file bankruptcy, even if you currently have $1 million in your retirement account, that is not taken into effect and it cannot be touched. Your creditors cannot touch that money. If you liquidate it, they absolutely can. So we don't want to remove that protection from our retirement accounts. So please hold tight. The stock market will go back up eventually. And if you're really worried, contact your financial advisor for guidance, especially if you're getting close to retirement age right now. That's what that person is there for. So please reach out to them. Don't stop paying on your insurance policies. This can be tempting to cancel life insurance or other policies thinking that you'll just pick them back up later. But what if disaster strikes and the coverage that you desperately need is gone, right? Even if cash is tight, I don't recommend that you expose yourself to tens or hundreds of thousands of dollars of risk to save a few bucks right now. If your premiums are unaffordable, contact your insurance agent to see if you can just temporarily decrease but not cancel your coverage just to get you through the crisis, right? Because the last thing you need is some major event to happen and that insurance not to be there. That's just adding insult to injury, right? The final don't is don't act from a place of panic. It's very important to take a deep breath. Financial knee-jerk decisions rarely end well. Ask yourself, 1 year from now or 5 years from now, will I be happy with this decision that I'm making? Once this crisis passes, which it will, we want to use this experience as motivation to disaster-proof our finances for the future. And if you are feeling a very strong sense of panic, then please reach out to a financial professional for help. So if you're not currently working with a financial advisor or a CPA or a banker that can help you make some wise decisions, certainly you can reach out to me. If you go to my website, christineluken.com, there's a button where you can contact me. You can set up a time for us to chat via phone, or you can send me an email, and I will respond to you, I promise. That's what I'm here for. All right. So at some point, this is going to be behind us. And, I don't want you to forget right? Sometimes once a bad situation is behind us, we can just like wipe our brow and say, oh my gosh, that's over. I'm so glad that's over. But we don't really want to go back to life as usual if you entered into this crisis without being financially healthy. So we want to make sure that we are financially healthy for the future. Because here's the thing, when this passes, all of us are going to go through financial emergencies at some point, right? The unique thing is that we are all going through this right now together. We're all going through a similar financial emergency. Now, for some of us, it's better or worse than others, right? I mean, there might be some households where both spouses are not working at all, or, maybe one has had a reduced income, but the other one's still working. There's a whole combination of things that are going on here. But what's not unique about this situation is that all of us are going to encounter multiple financial emergencies or outright disasters throughout our lives. These things just happen. And if you're financially prepared for disaster, um, you're probably still a little concerned right now. My husband and I, we are very well prepared for financial disaster. But I am still concerned right now, right? I don't know how this is going to affect my business and my income. I certainly hope that my husband will be able to continue working because his company is considered a critical industry. But, you know, I still have some concerns. But here's the thing, I'm not panicked and I'm not fearful. So once we come out of the other side of this, which we will, I want you to use this experience as motivation to disaster proof your finances for the future. All right, so here's what we need to do in order to disaster proof our finances. The first one is practicing financial situational awareness. Now, if you've ever taken a self-defense or personal safety class, you have heard of the term situational awareness. And essentially, it's scanning your environment, noticing what's going on around you, so you're not caught off guard by potential danger. Being oblivious or distracted, that might get you mugged in the wrong part of town. But being clueless about the state of your money, that's going to have you in full on panic mode when financial disaster strikes. So, we talked about assessing your financial situation. And here's the thing, we don't want to assess once and never return to it. My goal with everyone that I work with is to institute what I call weekly money dates. Why is this important? Because, by spending just a little bit of time on your money every week, it helps you to maintain that situational awareness about your finances without being obsessed. So I know that there's a lot of financial gurus who say that you should do a monthly budget. So I actually disagree with that. I'm not saying you shouldn't have a monthly spending plan, but I think you need to be looking at it more than once a month. So my goal is for my clients to spend about 15 to 20 minutes a week checking in on their finances, personal finances every week. Now, just because I call it a money date doesn't mean it has to happen on Friday night. Typically, I do mine on Saturdays or Sundays. And here's what I do. I pay any bills that need to be paid. I check my spending against the plan. And my husband and I also talk about any exceptions, if there are any, for this week. The other thing that I will do is I may also move some money into savings at this time. And here's why I like doing it weekly, because if you're only looking at your finances once a month, if you create a plan at the beginning of the month and then you start to get off track during the first week, if you don't go back and start checking on a weekly basis, if you get to the end of the month you could be way off track, right? But if you're checking on things weekly, you can catch things as they're happening and course correct. Um, and that's going to make sure that you stick to your plan much better than just checking once a month. Now, here's the other thing. I don't think you need to be looking at it once a day. That is being fearful and being obsessed. Once a week should be fine. Now, if you're a business owner and you have a high level of transactions, then maybe you do need to be looking at your business finances once a day. But for most people, personal finances, once a week is plenty. I also highly recommend using a tool that tracks your spending, your income, your debt, and your savings. So here's some practical action for you. Use a money management app to track your spending and your net worth. My recommendation is Ask Zeta. I use this with all of my coaching clients. It allows me to have coach access so I can actually help them learn how to use it. I actually help them to set it up. You can use another tool as well. Obviously, there are some other free ones out there like mint.com. Your bank might also have some sort of spending tracker built right into your online banking. But you want to make sure, whichever tool that you're using, that allows you to link up all of your bank accounts to it so it can pull in all the different sources where you're spending money. And I love Ask Zeta because it works really well for couples, but singles can also use it as well. It also allows couples who maybe are not married yet, or they have some of their money separate, to do a hybrid plan and have part of their spending be shared and part of their spending be separate. So that is my recommendation. But in all honesty, the right tool for you is the one that you will use on a consistent basis. All right, so we want to stockpile emergency savings. Now, notice I did not say stockpile toilet paper. We want to be stockpiling some savings. An adequate emergency fund is like a warm blanket during a financial winter. I recommend that everyone have 6 months of their household expenses in a savings or money market account. So that's why it is important to do the assessment and figure out exactly how much does it take to run your household during an average month. You need to have that number first before you can even get a target for your emergency savings. Now, let's just say your household expenses are $5,000 every month. If you currently have no money in your savings account, $30,000 seems like a lot of money, right? Even after this crisis is behind you and you're back to earning a regular income. So typically what I will do is give my clients the goal of getting 1 month into their savings first. Now, I did have some individuals ask me some really good questions during our last webinar. And one of them was, I've heard that I should just save $1,000 in my emergency fund, and then I should start paying off my debt. And so that comes from Dave Ramsey and his baby steps. I will tell you, I taught his class for 10 years, and he hasn't changed his recommendation of how much to have in that starter emergency fund in 20 years. $1,000 is not enough, you guys. At a very minimum, you want to have 1 month before you start paying any extra on your debt, because you can pretty much sneeze and have an emergency that costs $1,000. So I want to see my clients having at least 1 month of savings first before they tackle any debt. But the ultimate goal is to have 6 months of their household expenses in savings. Now, not a CD, and here's why. If you need to access the money, you will get a penalty if you take it out early from a CD. You'd be much better off finding a higher interest savings account. It might be one with a bank that's purely online. Just knowing that you can access that money whenever you need it. And just be aware that emergency savings is not an investment. It's more like an insurance policy. Your goal is not to earn a return on your emergency savings. Your emergency savings is there to be a cushion for you. Now, if you're self-employed, especially if your income is 100% variable, I typically recommend going closer to 9 or 12 months because things can be even more unpredictable for you. Now, obviously, these are very long-term goals. So go ahead and set, your first goal for having 1 month. And then once you reach that, then you can start bumping it up to 2 months, 3 months, etc., until you've got that fully funded emergency fund. The final point is I do not want you to rely on credit cards as your emergency fund. And here's why. Creditors can reduce your credit limit whenever they want to, for any reason or no reason at all. A friend recently confessed to me that her bank reduced her Visa's credit limit from $9,000 down to $1,000. And when she called to, find out what was going on, evidently there was an old unpaid medical bill that popped up as being in collections on her credit report. And honestly, it was from so long ago, she didn't even remember it. So don't be relying on those open credit lines, because your creditors can adjust them at will. So don't rely on those as your emergency fund. So here's your practical action. Start small if you need to, but start now. Now, when I'm talking to people and I ask them how much money they have in savings, if they tell me nothing, I will ask them, do you have a savings account? And usually they say no. And I'll say, well, why don't you have a savings account? And they say, well, because I don't have anything to put in there. Once I have some savings, then I'll open an account. Well, you know what? The exact opposite is true. You're never going to have any savings until you have a place for it to go. We need to give our money a good home. So you can open a savings account for like $10 or $25. We can all roll up some spare change and go open that savings account. The second thing I want you to do is to set up automatic transfers. You can start small. It can be $10 a week, but put it on autopilot. And as your finances improve, then start bumping that up. Keep your debt levels in check. You know what? I am not going to jump out of the bushes and cut up your credit cards. I'm not someone who says you should never have any debt. If you have a credit card or a car loan or a mortgage, that's okay, as long as your debt level isn't crushing you. Personally, I prefer to carry as little debt as possible, because you never know when your income could take a turn for the worse. But here's the most important thing. I like to tell people that having debt is like carrying around a weight everywhere with you. So let's just imagine that I handed you a 2-pound weight and I said, I want you to carry this with you everywhere that you go today. That wouldn't be overly burdensome, right? You could probably put it in your purse or in your backpack, heck, maybe even in your cargo pants. And it really wouldn't impede your daily life to carry around that little 2-pound weight. But if I handed you a 50-pound weight and I strapped it to your back and I said, you have to carry this with you everywhere that you go, that would make even every ordinary day tasks like bending over to tie your shoe seem almost impossible, right? My point is this: you can carry more debt if you have larger financial muscles. So if you have a high income, if you have a high net worth, then having higher levels of debt is not going to feel like it's crushing you. So, if I have a doctor client who has $50,000 of student loan debt, but he's making $300,000 a year, that might not seem too bad, right? That payment might not seem burdensome. But if I have a coaching client who is making, let's just say they're making 85 or $100,000 a year, but they have $50,000 of credit card debt, that's going to feel like it's crushing them. So we need to be very careful with debt. So, you might be able to comfortably carry your debt right now with your current income, but what happens if you lose your job or your business takes a hit? So if your income was reduced by 30% or more, are you still able to pay those minimums? So here's the practical action. Add up your total debt. How much total debt do you owe? If you could pay it off right now, how much is that? And how much are you paying each and every month in debt payments? So car payments, mortgage payments, credit card payments, how much are you paying out each and every month? Create a plan and start eliminating it, right? The only way that we're going to get out of debt is to pay more than we charge. It's the only way it's going to happen. Now, if you visit my website, christineluken.com/blog, you can type in the search bar, debt, credit cards, debt reduction, and you're going to get a whole bunch of different articles that'll pop up and give you some very practical suggestions on how to accelerate your debt payoff based on what is most emotionally satisfying for you, because that's really important as well. All right, be vigilant with your spending. When your spending's out of control, it's almost like pouring out your precious water on the ground in the desert. You are wasting your most important wealth building asset, which is your income. So, wasteful spending means less money for savings and less money for debt reduction. Um, Practicing situational awareness around spending money is really important. So, by using one of the money apps that I talked about, that's going to help you unmask the categories that are out of line. Um, Sometimes just being aware of how much you're spending in a certain area can help you course correct and make better decisions in the moment. The other thing that I will have my clients do occasionally is, if they have a particular category that's really out of control for them, is we might just switch it over to cash. Or sometimes we will open a completely separate checking account with a separate debit card, and we will put their discretionary spending, which that might mean, eating out, entertainment, etc., um, and completely separate that from the bill money. So what that does is you're basically putting portion control around the fun you're having, because once you're out of crisis mode, I want you to enjoy life, right? I'm not one of those people who thinks that you should live like a miser, eat beans and rice and, drive a half broken down car until you've built up your savings and paid off all your debt. Most of us don't need to do that. But it is important to keep a handle on our spending so it doesn't get out of control. So here's what I suggest. Every 3 to 6 months, scrutinize your expenses. Examine your spending on different categories. Is it really in line with what's important to you? And if you're a business owner, this is vitally important as well. So, if like me, you run an online business, there are a lot of tools that you need to keep everything up and running. So for example, we're doing this webinar right now on Zoom. So, I have a lot of recurring subscriptions that I use to run my business. I have to pay for email. I have to pay for different tools for my social media. I pay for my for my Zoom so that I can do video conferencing. And every 3 to 6 months, I look at all the things I'm spending money on each and every month. And first of all, asking, am I still using this? If not, let's get rid of it. Um, am I subscribed at the right level? Right. So maybe the subscription that you have is giving you all these extra benefits that you're not even using. So you might be able to downgrade your subscription and still get the things that you really need and want from that. So that applies to your personal finances as well. So if you've got a gym membership, are you using it? If you're paying for Netflix and Hulu and all these other subscriptions, are you actually using them? So here's your practical action. Track your spending. See if it's lining up with your long-term goals. And then decide what you're going to trim back on. All right, so raising the shields of insurance. I told you before that if you're in crisis, I don't want you to cancel your insurance. And like most people, you probably hate to pay for it. I can't say that I'm a fan of paying for it either, but insurance is a tool that removes financial risk that you're not willing or able to take. And if you've ever made a large claim on your auto or your homeowner's policy, you know the relief of having it there if you need it. So make sure you're covered for health insurance, life insurance, disability, and property insurance. The reason why I've highlighted disability insurance is because I see a lot of people lacking in this regard. Especially people who are self-employed. It's important to look into disability insurance because I believe the statistic is 30% of adults will have some disability incident during their working life. Now, it doesn't mean that they are becoming permanently and totally disabled. But let's just say, for instance, that you have a motorcycle accident and you can't work for 6 weeks. If you don't have short-term disability insurance, then you are going to be hurting. So disability insurance, it's really income insurance. So anyone in your household who is providing income, it's important that they are covered. Now, most of you, if you're traditionally employed, the least expensive way to purchase that is through your employer's plan. So your practical action is to talk to your financial professional about your insurance gaps that you might need to fill. And you know what? Even now, you can do that. You can set up a phone call. You can set up a video chat with them. It's very important to make sure that we've got these things in place to protect ourselves. All right, so the most important thing that we need to do is develop emotional invincibility. Disaster proofing your finances is partly about the money, but it's also partly about the mindset. And creating and keeping a positive money mindset, it is not a one and done deal. It's something that you'll always need to pay attention to. I mean, today's society thrives on panic, scarcity, and sensationalism. If your mindset isn't strong, you're going to be swept along on that tidal wave of fear. So, how do we develop emotional invincibility? This is something that I learned how to do from Hal Elrod in his book, The Miracle Equation. So let's talk about how this works. When something upsetting happens to you, set a timer for 5 minutes. Go ahead and have your meltdown. You can rant, you can rave, you can scream, you can cry, you can cuss, whatever you want to do for that 5 minutes. Now, once the timer goes off, stop what you're doing and say out loud, I can't change it. I can't change that this upsetting thing has happened. Now, put your effort and energy into something that you can improve or go relax and enjoy yourself. So, I want to give you a couple of quick examples of how you can apply this. So, you know, I've been applying this emotional invincibility tool for the last year. And it is rare now that something actually gets me emotionally upset. And most of the time, I don't even have to set the timer. So, when I first started using this tool, one of the things that would upset me a lot relative to my money was when I would have a coaching prospect who I knew would be an awesome fit, and they seemed really excited to start, and then they would cancel. I would get upset because I would feel like, was it something that I did? Was it something that I said? And then I would start worrying about the money to say, like, oh my gosh, like that client was worth $3,500 to me. Now, where's that money going to come from? And I would literally allow that to upset me for several days. So I began to practice this. Um, and now I don't even have meltdowns about this. I mean, I can go directly from hearing the news that the person who I thought was going to start coaching with me has changed their mind. I mean, I'm just like, all right, well, I can't change this. If they don't want to work with me or they don't see this as being important, I have no control over that. So, but what I can do is I can do something constructive. So maybe that means I send out an email to my list, or I do a social media post, or I follow up with other individuals who have expressed an interest, but they haven't given me a decision yet. I can do other constructive things around that particular area. But you know what? Sometimes when something upsetting happens, there's really nothing we can do about it. In fact, this happened to me very recently, and it was so cool because I could watch other people's reaction to the same thing. Um, and just kind of seeing the contrast was very interesting. So, right before the pandemic got serious, I went down to Florida to visit my best friend. And on the way back, we boarded our plane. We're sitting on the tarmac. They come on and they say, you know, hey, there's been a delay. Here's what's going on. There's something wrong with the landing gear and the hydraulics, and we're checking it, and it's well, we'll let you know. And I could see people were getting upset. And then finally they told us we have to deplane. We have to go back into the airport. They're going to get us on a different plane. Get your stuff. I mean, you could see like there were so many people that were just like so upset by this. And actually the lady sitting next to me she was like kind of freaking out. Um, and I just shrugged my shoulders. I was like, well, I can't change it. And she was like, how can you be so calm about this? And I said, look, I decided a long time ago that getting upset over something that I can't change is a waste of my time, effort, and energy. And so, you know what? I used that time to read a book on my Kindle, right? So the point of this takes practice, right? We have to do this and start practicing on the small things. So when something upsetting happens, set your timer for 5 minutes, let yourself have your meltdown, say out loud, I can't change it, and then go do something constructive or go do something enjoyable. So, just a reminder, it is a waste of energy to be upset over something that you can't change. Now, trust me, this does take practice, but start doing it right now. Start doing it right now. And remember, disaster proofing your finances is a process. You are not going to get this accomplished in a day, a week, or even a month. So go ahead and pick several of the action items that I mentioned and put them on your calendar over the next couple weeks and start that process. Your future self is going to thank you. I promise. All right. So we have a little bit of time for questions if anyone wants to pop them in the chat box. And I am going to go ahead and end the recording. So, all of you who are watching the replay, thank you so much for being here. Please remember you can go to christineluken.com and click contact. And if you have particular questions that you didn't get answered today, you can send me an email or you can sign up to get a quick 15-minute call with me, and I will be happy to answer those questions for you. So thanks so much for being here. This is Christine Luken, your financial lifeguard.